Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. It's not uncommon in the world of investing and funds management to see rockstar investors emerge, but what happens when a rockstar picker is no longer picking stocks? Blackwattle Investment Partners is a new Australian fund manager launching this year with the backing of some of Australia's wealthiest families. It's aiming to take a different approach, removing the key person risk. So what's this look like and how do they find the opportunities in the market? Remember, this is general information only and you should seek professional advice before making any investment decisions. Michael Skinner is the Managing Director and Chief Investment Officer at Blackwattle Investment Partners. Michael, welcome to Fear and Greed.
Hi, Sean. Nice to be here. Thanks for the time.
So, a bit of history. Why do we have rockstar stock pickers? So I've been a journalist for 25 years and there's always been sort of Hamish Douglas, more recent times, people like Peter Morgan, Chris Mackay many years ago. Some of these people have always been considered rockstar stock pickers. Why?
Yeah, look, they probably get that title built over a number of years of marketing themselves and their business, and generally periods, short or long, of really positive returns. That's how the market's really gravitated to those individuals. We think it's not necessarily the best way to run a business, having a rock star, in your words, at the top making the decisions. And there's a number of risks that come associated with having such concentration of decision making.
Yeah, absolutely. So let's go into that. Tell me about those risks.
Well, I suppose that they're multifaceted in our opinion. If you've got concentrated equity ownership of a business or a fund, a central figure making all the decisions, that is fraught with risk and reputational risk. Similarly, if you've got a fund manager or a stock picker, in your words, deciding the direction of one or multiple portfolios, there's risk that they underperform across all of their portfolios, or that they won't be there to run the funds, and then suddenly there's a big hole left in the management team that has to be filled.
Okay, so how does Blackwattle think about it? Take me through how Blackwattle operates.
Yeah, so look, Blackwattle truly is a partnership. We don't believe in the concentrated equity ownership. We don't believe that one person should be making all the investment decisions. So we are a partnership, and that is at our heart. At the heart of Blackwattle is alignment. We are all owners of our business. We've all committed significant personal capital to the business and to the portfolios. And we've really spread out the decision making. So we'll be launching 4 portfolios in our phase 1, all with outstanding teams and individuals within those portfolios. So they will be responsible for managing their own equity investment universe and delivering returns for our clients within those universes. So at one period of time or another, you might have our small cap fund doing well, or a mid cap fund or a large cap fund. But the key point is they're all discrete decision makers. There's not one person, there's not myself as the CIO dictating how we invest across the 4 portfolios. Rather, they're highly experienced teams make their own decisions with oversight, of course.
Okay, so is there a common methodology or anything?
Absolutely. We think we're going to be different in the market for a few reasons. I suppose the first point is our alignment. We think we are the most aligned fund management company in the country, day one. But the second point of difference is quality. We really want to own the quality space, the quality investing space. We don't subscribe to the factor biases of, growth investing or value investing or momentum. Those styles are great for certain seasons and certain market cycles. Rather, we look at investing differently. We just want to buy the best quality businesses within a given industry. So that might be the best quality technology play, mining service company, food or retailer. We're just looking at business quality and owning that for the long terms and letting that quality really compound returns for our portfolios.
Okay, and we're primarily talking about equities here as opposed to other asset and real assets too?
Correct. Blackwattle will be launching 4 equity portfolios from July. They are all ASX domestic portfolios. We think there's significant demand in those equity classes that we're launching. We will move into global equities at the right time. We'll walk before we can run. But probably in year 2, maybe year 3, we'll be launching 1 or 2 global equity portfolios. We think there's a real opportunity to deliver strong outperformance in those equity classes, and there's a gap in the market at this point. A lot of the incumbents are, or there's either a few incumbents, or the incumbents aren't doing particularly well from a performance perspective. So global equities are phase two, and then if we continue to do well, as we hope we will, we'll move into other asset classes in phase three.
Stay with me, Michael. We'll be back in a minute. I'm speaking to Michael Skinner, Managing Director and Chief Investment Officer at Blackwattle Investment Partners. What is it about Blackwattle that you've got? Because there are lots of fund managers out there. Is it about the people primarily? Why I should put money with you? Or is it about the methodology? What is it?
Yeah, look, there's a lot of great funds in Australia, and they've all got great people running them. So, just having great people isn't necessarily enough or really a point of differentiation. We've got great people, so do our peers and our competitors. Look, our advantage and our differentiation is really multifaceted. How this journey started, really, if we take a step back, is 2 years ago, myself and some of my partners today, we looked at the industry. We recognized where our peers did things well, but we really recognized a number of inadequacies of funds management. It was a lack of alignment. It was style biases. It was inadequate fee structures. It was a lack of information flow to underlying investors, and it was poor governance and operational practices. We really set out to design a better funds management model, and I think that's what we've managed to achieve. So, as an example, our alignment is at our heart, as I mentioned. As a group, we've committed over $10 million of our personal capital to our portfolios. And every year, we're contractually bound to invest more in our portfolios alongside our investors. It's the fact that we've got an independent board helping us govern our decision making. It's the fact that we've got young, highly experienced teams. Everyone is between 34 and 46, but they have on average 20 years of investment experience. There's no personal trading in our business. It's too commonplace in the industry for fund managers and analysts to be trading personally whilst not investing in their own funds. At Blackwattle, there's no personal trading. We're only invested in our own portfolios. Then if we do turn to the people and the teams, we've lifted out teams that are, in most cases, top quartile or decile in their given equity universe over long periods of time. And then finally, it's the fact that we're constraining all of our portfolio's capacity. So in funds management, as you invest more capital, returns will degrade. We are aggressively capping the capacity of all our funds, in some cases 50, 60, 70% below our peers, to really preference performance over gathering management fees.
Okay. And so who are you? Is it high net worth individuals that you're hoping to attract money from?
We have quite a targeted investor strategy. It is high net worth individuals. It's that sophisticated investor, wholesale, family offices, advisor groups. They're really our target market. We have a number of conversations started with super funds, well-known Australia super funds. We will look to represent their capital at some point in time, but it's really that wholesale market and high net worth individuals that we'll be targeting.
What about ESG? I know you're introducing something called the ESG Review Council. How are you thinking about that? Because that is certainly something which investors are thinking about.
Yeah, look, we want to be forward thinking in ESG and continually push ourselves to be better. So we will have developed clearly defined ESG policies. Our investment teams and process will have ESG considerations built in throughout, whether that be simplistically negative screening poor ESG ranking companies, or more sophisticated, looking to discount our valuations and increase our cost of capital in our valuation models to represent ESG risk factors. We will also extend that into quite a lot of time committed to ESG considerations with corporate Australia. We'll hold regular ESG meetings with our underlying investments, really to make sure that we're across the ESG risks that are present within a company. Then finally, something we think that's quite unique to Blackwattle is we've installed an ESG review council and also an investment review council, actually. Our ESG council is made up of 6 diverse, highly experienced individuals from a range of differing backgrounds: environmental, climate, risk, governance, audit. Those individuals come into our company, into our portfolios at least once a quarter, really pushing our teams on their ESG thinking. They'll be provided with data on our portfolio holdings. They will assess the ESG risks that are emerging within a given stock investment or within the portfolio as a whole, and push our teams to be mindful of the risks that are emerging, reporting to our board. Really, the next step is if there's a risk that's unacceptable to us, we'll then approach our company that we're invested in and advocate for change.
Okay. So you're kicking off next month, I believe. The first couple of funds, are they small cap, mid, large, one of each?
Our first 3 funds that will launch in July are an ASX mid-cap quality fund, a long-short quality fund, and a large-cap quality fund. 2 months later, in September, we'll be launching a small-cap quality fund. That will be our first 4 funds that launch. And then we'll move into other, as I said, in year 2, global equities.
Michael, good luck with it, and thank you for talking to Fear and Greed.
Thank you very much. Pleasure to be here.
That was Michael Skinner, Managing Director and Chief Investment Officer at Blackwattle Investment Partners. This is the Fear and Greed Daily Interview. Remember, you should get professional advice before making any investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.